What if every dollar you've ever touched, every paycheck, every saving, every bill was never real money? What if the system that prints, loans, and destroys those dollars was never built to serve you, but to control you? For over a century, Americans have trusted the Federal Reserve to manage stability. But the shocking truth is this: the real power has quietly shifted to an unregulated empire known as the shadow banking system, where trillions move unseen every single day. And every move it makes affects you. Your rent, your debt, your job security. This is the untold story of how America's money was hijacked and why 99% of people will never know who's really in control. Where are you watching from? Drop your city or country below. And subscribe if you want the unfiltered truth about money, power, and the hidden history they never teach in school. Let's begin. In 1913, Congress passed the Federal Reserve Act. The official story was to stabilize the economy. The real result? A private banking cartel gained the power to create money out of thin air. 12 regional reserve banks, which are privately owned, could now issue credit as money. But that credit wasn't wealth. It was debt. Every dollar that enters our economy must first be borrowed, meaning every single dollar you earn already belongs to someone else. Sound familiar? You get a raise, but your rent rises faster. You work hard to pay off debt, but prices just climb again. It's a treadmill by design. Then in 1971, President Nixon severed the dollar's final tie to gold. From that moment on, money became pure fiat, backed by nothing but faith in the very system that benefits from your debt. And that's when the hidden machine truly began to grow. Without the physical limit of gold, banks discovered something dangerous. They could create unlimited money by turning debt into tradable assets. This was a game changer. Enter the 1980s, the rise of investment banks and something called off-balance sheet vehicles. They invented complex instruments like mortgage-backed securities, derivatives, and collateralized debt obligations. They sounded technical and confusing, but at their core, they were private money-printing presses. This parallel network became known as the shadow banking system. It wasn't illegal, it was invisible. By 2007, shadow banks controlled over $60 trillion in assets. That's twice the size of the entire traditional banking world. And none of it, not a single dollar, showed up in the Federal Reserve's official numbers. Does this playbook sound familiar? It's the same one running today through crypto, derivatives, and what they now call digital liquidity pools. The illusion of control keeps us calm. The reality of control keeps them rich. When the 2008 crisis hit, the news blamed bad mortgages. But behind the curtain, something much darker failed. The liquidity web that powered the entire shadow system. Banks suddenly couldn't trust each other's collateral anymore. The overnight loans, which are the lifeblood of this shadow money, froze solid. And that's when the Federal Reserve stepped in. Between 2008 and 2010, it secretly injected over $16 trillion into global financial institutions. Not just American banks, but European, Asian, and even offshore hedge funds. Publicly, they called it stimulus. Privately, it was a bailout of the shadow empire that had completely replaced them. And that's where our story takes its first sharp turn, because the architect of this invisible money system wasn't a politician, or even a bank. You won't believe the name. This system wasn't just an accident of history. It was meticulously designed. The same individuals and institutions that pushed for the Federal Reserve in 1913 were the ones who later championed deregulation in the 80s and 90s. They understood that if you control the creation of money, you don't need to make laws. You are the law. The shadow system was their masterpiece, a financial network operating beyond the reach of governments and voters. Think about the implications. When you hear about inflation, you're told it's because of government spending or supply chain issues. But what if the real cause is the shadow banking system creating trillions in credit out of thin air, bidding up the prices of assets like stocks and real estate? This is how the wealth gap widens. While you work for dollars, the ultra-rich have their assets inflated by this invisible money creation. Your salary can't keep up because you're playing a different game. You're earning in the real economy while they're profiting from the shadow economy. Let's look at the 2008 bailout again. That $16 trillion wasn't a one-time event. It set a precedent. Every time there's a crisis now, whether it's a pandemic or a market downturn, the solution is always the same: inject more liquidity. But where does that liquidity go? It goes to stabilize the very shadow system that caused the instability in the first place. It's a feedback loop. The system creates risk, the risk materializes, the public foots the bill to save the system, and the system grows even larger and more powerful. Main Street gets austerity and inflation, while Wall Street gets bailouts and bonuses. This isn't just about history, it's happening right now. The tools have evolved. Today, they talk about central bank digital currencies, or CBDCs. They're sold to us as a convenient modern way to handle money. But think about what a CBDC really is: a direct line from the central bank to your wallet. It offers the potential for complete surveillance and control over your spending. What if your money could be programmed to expire, or restricted from being used on certain goods? This isn't a far-fetched conspiracy theory. These are features that are being openly discussed by central bankers around the world. The shadow banking system was about operating outside the rules. A CBDC could be about rewriting the rules entirely, with you at the very bottom. The story of our money is the story of a slow, deliberate transfer of power. It moved from a system backed by a real asset, gold, to a system backed by faith in government. Then it quietly moved again, to a system backed by nothing at all, run by an unaccountable network of private financial institutions. We were never asked, we never voted on it. It happened in the shadows, using language too complex for most people to understand. And that complexity is a feature, not a bug. It's designed to keep you from asking the right questions. So, what can you do? The first step is awareness. Understanding how this system works is the first step toward reclaiming your financial sovereignty. Question the official narratives. When they tell you inflation is temporary or that a bailout is necessary, ask who really benefits. Educate yourself on alternative assets and systems that operate outside of this control structure. This is not financial advice, but a call to become your own financial expert. The more people who understand the game, the harder it is for them to play it. We've covered a lot of ground, from 1913 to today, from the Fed to the shadow banks. But we've only scratched the surface. The next layer of this story involves the international institutions that coordinate this system globally and the geopolitical moves that are made to protect the dollar's dominance. It's a rabbit hole that goes deeper than you can imagine, but it's a journey worth taking. Ever wondered who really pulls the strings of the global economy? We're often told it's the Federal Reserve, the big boss of money. But what if I told you there's another, more powerful layer hiding in plain sight? Today, we're unmasking the true power behind the network and what it means for the next financial collapse. Most people believe the Federal Reserve sits at the top of the financial pyramid, but that's not the whole story. Above the Fed, there's a quiet, immensely powerful organization founded way back in 1930 in Basel, Switzerland. It's called the Bank for International Settlements, or simply the BIS. Think of it as the central bank for central banks. It connects the US Federal Reserve, the European Central Bank, and over 60 other national central banks into a single coordinated web. Here's the catch. The leaders of the BIS are not elected. Their meetings are not public. Their books are not audited by any government. Yet, this secretive group It dictates global liquidity policies that ripple through every national economy on Earth. So when you hear that the Fed has decided to print trillions of dollars, that decision likely originated from a meeting room in Basel, where unelected technocrats coordinate the flow of credit across the entire planet. This is the very place where the modern shadow financial system was engineered, through complex agreements, massive liquidity swaps, and clever legal loopholes designed to operate beyond the reach of national laws and voter oversight. So, how does this shadow money machine actually work? Let's break it down in simple terms. Imagine a major hedge fund needs a massive amount of cash, and they need it fast, like overnight. They can take some US Treasury bonds they own and use them as collateral to get a short-term loan. This transaction is called a repo, short for repurchase agreement. It's like a pawn shop for financial giants. But here's where it gets really crazy. The institution that lent the cash can then take that same collateral, those treasury bonds, and use it to get another loan for themselves. This process is called rehypothecation, and it can happen over and over again. A single dollar's worth of an asset can be pledged multiple times, creating a mountain of credit out of thin air. It's how one real dollar gets multiplied into 20 or more synthetic dollars circulating in the shadows. To give you an idea of the scale we're talking about, by 2019, the repo market was moving an astonishing $4.5 trillion every single day. That's 20 times more than all the physical US cash in circulation. This invisible river of credit is what powers the global financial system. It's the fuel for hedge funds, it props up pension systems, and it greases the wheels of international trade. It's a system built on promises, moving at the speed of light. And what happens when the slightest crack appears in this system? When confidence wavers for even a second, the Federal Reserve steps in, acting as the ultimate backstop. Between late 2019 and early 2020, the Fed quietly injected $9 trillion into this market to prevent a complete meltdown. They kept the illusion of stability alive. But here's the problem. Each bailout only deepens the system's addiction to easy money. Each crisis leads to tighter control by the very institutions that created the risk. What started as a tool for financial efficiency slowly transforms, and greed becomes the unofficial system of governance. Let this sink in for a moment. For every $1 of real, tangible economic value, goods produced, services rendered, there are anywhere from $20 to $30 of synthetic credit and financial derivatives floating around in this shadow system. That's leverage built on top of more leverage. It's a global financial structure built not on production, but on promises about promises. We've created a house of cards of epic proportions. And who pays the price when this house of cards inevitably wobbles? You already know the answer. In the 2008 financial crisis, ordinary households saw their net worth evaporate, losing a collective $19 trillion. But what happened to the ultra-wealthy? In the 3 years that followed, billionaire wealth jumped by 50%. Fast forward to 2020. The government unleashed $5 trillion in stimulus to save the economy. The stock market roared back to life, and in less than a year, the top 1% of earners got richer by $6.5 trillion. This isn't a coincidence. It's the design of the system. Every new dollar of government debt created to fund these bailouts becomes fresh collateral for the shadow banking system to leverage. The public's burden is literally turned into the elite's goldmine. This is the dark secret at the heart of modern finance. Your debt is their asset. Your struggle is their leverage. The more the system requires bailouts, the more powerful and wealthy the architects of that system become. But the next collapse won't look like 2008. It's going to be something entirely new, driven by technology. It will be instantaneous and algorithmic. Think flash crashes triggered by AI trading programs, digital liquidity pools evaporating in microseconds, all moving faster than any human regulator could possibly react. When the breaking point is reached, there won't be time for congressional debates or weekend bailout packages. The system will simply reset itself in the blink of an eye. And where will that leave the public, holding bags of rapidly devaluing digital dollars, their savings wiped out not by a slow burn, but in a digital flash? History teaches us a crucial lesson. Every empire eventually collapses when its money becomes fiction. Rome fell after it debased its silver coins. The British Empire declined as it inflated the pound sterling. America appears to be on the same path, but this time the process is happening faster, it's smarter, and it's digital. Now you understand what 99% of people don't. Money in our modern world isn't just a measure of wealth. It is an instrument of control, and the ones pulling the strings have designed the game so they never ever lose. If you found this information valuable, share this video before it gets buried in your feed. And make sure to subscribe and turn on notifications, because in our next video, we're going deeper. We'll look at the names, the data, and the receipts that prove all of this. The final question we all have to ask ourselves is this: are we any wiser than we were in 2008? Or are we just walking down the same path toward a cliff, just wearing better suits this time? Thanks for watching.